Hi, this is Binu Joseph from Inditrade. This week, the Indian market is likely to be driven by data both domestically and globally. Last week, after our markets closed, the US non-farm payrolls data came. The US economy added 204,000 jobs in October, which is higher than the 1.2 lakh estimated. This report and other good economic news has revived speculation on US Fed withdrawing its stimulus sooner, which is not good news for our currency and stock markets. The global markets are waiting for the outcome of the third plenum meetings of Communist Party of China, which is taking place between November 9th to November 12th. This could provide clues on the direction of Chinese economic policy for the next decade. Domestically, Indian markets are waiting for trade data, the September IIP, the CPI and WPI based inflation data for October. The Commerce Ministry will on Monday release trade data for October. Last month, India's exports had surged to a 6-month high, while imports had plunged to a 2.5-year low, narrowing the trade deficit to its lowest level since March 2011. If the October trade deficit continue to be in the single digit, it could give some relief to the currency and stock market. The September IIP data will be released on Tuesday, which is expected to be a good number due to the better core sector number and high exports. Inflation numbers for the month of October is expected to be higher than the September. Wholesale price inflation is expected to come at around 7% against 6.46% in September. The core price inflation is expected to be around 10% as against 9.84% in September. If the data comes on higher side, then markets could be under pressure on fears of a rate hike by RBI in its December policy review. Then the next important factor is SBI announcing its results on Wednesday, where the profits might decline while asset quality and provisions will be closely watched. Other companies expected to announce results are Coal India, M&M, SunPharma, CIPLA, ADAG stocks, ONGC, Tata Steel and Tata Power. The foreign funds have been buyers of Indian equities for the last 24 consecutive sessions. However, the inflow of foreign money was the lowest in last week when we compare the last 1 month data. So the fund flows, especially after the fears resurfaced about US Fed tapering, is a major factor which can drive the market this week. A technical view on Nifty. Technically, the market is looking for more downside. The indicators like RSI, MACD, slow stochastic, etc. are pointing more downside in daily as well as in weekly charts. For Nifty this week, the critical level to watch is at 6082 level, and a close below this could drag the benchmark to further downside. The first support on the downside is at 5929, which is near to its 50-day moving average. Below this, 5830 could be the major support in the short term. There is another reason why 5830 is important. Last few weeks, the benchmark has been moving in this rising chart pattern, and when it breaks and closes below the lower line of this pattern, then it could target further on the downside. The target could be the height of this particular formation, which is around 300 points. So 300 points from the lower band, which is at 6120, gives a target of somewhere around 5830 in the short term. However, on the other hand, during an up move due to some fundamental news, then on the upside, the major resistance for Nifty is at 6220. Thank you for watching the video. Disclaimer.